Hello and welcome to this week's Real Estate Report on the Finance News Network. I'm Melissa Beaumont-Lee. This week we continue our series looking at the suburbs with the highest increase in median selling prices in 2010, with a focus on two suburbs in New South Wales. In our interview, we speak with First National Real Estate CEO Ray Ellis, and in our tax tip, we look at donating property. But first, let's catch up on the latest property news with Lelda Smiths.
The housing market is showing signs of strength as home loans rose for the sixth month in a row. The Australian Bureau of Statistics has reported an increase of 2.1% in the number of new home loans for December 2010. This followed a 2.5% rise in November. The ABS says total housing finance by value rose 2.5% in December. It was a strong finish for the year, with the number and value of commitments rising for all major categories except for the purchase of new dwellings.
This week we continue our series looking at the suburbs with the highest increase in median selling prices in 2010, with a focus on two suburbs in New South Wales. First, let's take a look at Wollstonecraft, located 6 kilometres northwest of Sydney's CBD. With a population of 7,580 in the 2006 census, Wollstonecraft is a harbourside suburb on the lower North Shore of Sydney. The suburb was once home to former Prime Minister John Howard. It's bordered by the Pacific Highway down to the point of Berry Island Reserve. Wollstonecraft is surrounded by parkland and has both red and blonde brick blocks of units built in the 1960s and 70s, as well as newer apartments on waterfront estates at Wollstonecraft Bay. There are also a number of larger freestanding houses. The suburb does not have its own school, but neighbouring suburbs such as Greenwich and Crow's Nest cater for the area. Wollstonecraft has a train station on the North Shore and Northern lines of the City Rail network. Turning to the figures, houses in Wollstonecraft recorded the capital's highest increase in median selling price in 2010, rising 48.1% in the 12-month period. 15 properties were sold in the year, recording a median price of $2 million. Over the past 10 years, the median selling price has risen 8.2% a year. Our next suburb is Kensington, located 5 kilometres southeast of Sydney's CBD. With a population of 10,849 in the 2006 census, the suburb is bordered to the west by Southern Cross Drive, Moore Park to the north, and Royal Randwick Racecourse to the east. Anzac Parade is the main road through the suburb. It is well serviced by numerous buses linking it with the city and surrounding suburbs. A shopping strip runs the length of the main road. Kensington is home to NIDA, the National Institute of Dramatic Art. The suburb includes the University of New South Wales, which accounts for the large student population living in the area. Kensington is heavily influenced by the university and the racing industry, bordering the suburb. The Australian Golf Club is also within the boundaries and is arguably Australia's oldest club. There is a mixture of high and medium density housing, as well as freestanding homes. Turning to the figures, houses in Kensington recorded the capital's second highest increase in median selling price in 2010, rising 44.2% in the 12-month period. 51 properties were sold in the year, recording a median price of $1.73 million. Over the past decade, the median selling price has risen 9% each year. Let's now turn to our interview. This week we speak with First National Real Estate CEO Ray Ellis about the outlook for property in 2011.
Metropolitan Sydney should return to its dominance in the Australian market in 2011. There's a number of factors for this. The first is March 26 is a state election. That'll get that off the agenda, and confidence will return to the market that that's done and dusted. Secondly, there's been a lack of supply in recent years. That's now coming to good conditions in the market. Rental returns have been above 5%. Growth in prices have been around about 4 or 5% coming into 2011. Confidence is returning, so Sydney should be very good for 2011. Not the boom times we saw perhaps 6 or 7 years ago, but certainly nothing like the poor conditions in recent years. Well, Melbourne has been the star performer in 2010, and that looks set to continue throughout 2011. What has caused Melbourne's growth is the high population intake into that city, then also the completion of infrastructure projects such as the Western Ring Road, which has seen a dramatic growth in the western and northern corridor. In 2012, the Frankston bypass in the southeastern suburbs is coming online, and then again that'll see growth in those outlying eastern suburbs there. So Melbourne should be a good solid performer in virtually all suburbs in 2011. Brisbane and that greater southeastern Queensland corridor was set for a slight increase in growth in 2011. But of course we've seen the floods in January and now the cyclones in February. What effect that has on the psyche of the buying and selling public, very hard to guess at the moment. But what we should see is a return to normal conditions as opposed to the very poor conditions in recent years. The effect on property values in Brisbane as in relation to the floods is going to be the key question. Because after 1974, property values halved and it took about 4 or 5 years to even improve to pre-74 levels. Hopefully we won't see the same conditions again. But then on the upside, rental accommodation is going to be very popular in Brisbane as people renovate their homes, so strong rental growth will occur. So investors may be a perfect opportunity to get into the Brisbane market.
And now to the tax tip of the week from Depreciator, the tax depreciation schedule specialists. This week we look at how one goes about donating property. First up, ensure the fund, authority or institution you want to donate the property to is eligible to receive your donation. The donor is then required to lodge a request for valuation form with the Australian Valuation Office. Following the valuation of the donated property, you will receive the valuation certificate. With this certificate, you may then claim the valuation amount as the tax deduction for the financial year in which the donation was made. As always, do remember to consult with a tax accountant or tax professional before making any tax-related decisions. And that is the Real Estate Report for Monday the 21st of February. Thanks for joining us. I'm Melissa Beaumont-Lee for the Finance News Network.